heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde is off. This is Bloomberg Technology. Coming up on the program, facing mega fines. The European Union opens investigations into Apple, Google and Meta in the first probes under the bloc's Digital Markets Act. We go live to Brussels. Plus, we'll take a deep dive into the Justice Department's lawsuit against Apple as our own Mark Gurman argues the case is missing an opportunity to address more pressing concerns. And Lucid getting a $1 billion cash injection from its biggest investor, providing the troubled electric car maker with a needed lifeline. We'll discuss that and so much more through the hour. Let's get right to Lucid. Look at Lucid shares in the US session. Now up 8%, but had been as high as around 20% following the market open. This is a private placement of convertible stock. It takes the Saudi PIF and its affiliates' investments in Lucid to $6.5 billion. All told. A lot more to discuss on that later in the program. These are the mega cap technology shares that we're watching in the session this Monday. They are all moving to the downside. Apple down a percentage point. It's down 12% year to date. Alphabet, parent of Google, down more than a percentage point. Meta down 0.7%. We have an EU probe of each of those companies under the Digital Markets Act. This is what EU Antitrust Chief Margrethe Vestager said earlier today.
These are serious cases. Had we been able to solve that with merely a discussion, it would have been resolved by now. So we open for good reasons, because we find that if this, in inverted commas, compliance solutions, if they persist, then consumers will not have the choice that they were promised by the Digital Markets Act.
Let's go to Brussels and Bloomberg's Samuel Stolten. Sam, just outline the basics of these probes under the Digital Markets Act and how they relate to those US technology companies.
Yeah, good afternoon here from Brussels, Ed. And indeed, we're back here again, the EU facing up to the dominance of big tech. And this is the news today that the European Commission has opened 5 investigations under its new Digital Markets Act rules targeting Apple, Google and Meta. Now, how serious is this really? Well, it's certainly a statement of intent from Brussels that it clearly wants to enforce as robustly as possible these new digital competition rules, which only took hold just 18 days ago on March the 7th.
So we played that clip from Vestager, and one of the questions she got in the press conference, which I'm assuming you were in, was, is this a bit front run? Is this you moving quickly? And she basically said, no. We are moving in a timely fashion. We're also showing the potential risks to these technology companies. Just explain what fines, if they were to be fined, these tech companies could be facing under an EU action.
Yeah, so from today, the Commission will aim to conclude these investigations into Apple, Google and Meta within a period of about 12 months. At the end of that 12-month period, it will adopt what's called a non-compliance decision. And with that power, it has the capacity to fine these companies up to 10% of its global turnover for those types of breaches under the DMA. And also, it has these additional powers in the case of repeated infringements to fine these firms up to 20% of their global annual revenue, or even mandate the breakup of some of these companies. So it's a very, very serious matter. We're not quite at that stage yet. As I say, there's this 12-month period to go through until the Commission comes to a decision, but that kicks off today.
And for a little size and scope, Apple's revenue in 2023 was $383 billion. So 20% of that is a hefty chunk of change. Bloomberg's Samuel Stolten in Brussels. Terrific reporting. Thank you. The EU probe isn't the only antitrust story coming out of Apple. Last week, the DOJ here in the US filed a suit accusing Apple of violating antitrust laws and suppressing competition in the culmination of what was a 5-year probe into the company. I want to speak to John Bergmayer, legal director at Public Knowledge, and go a bit deeper on this. We were reflecting last week. This was a big story. You know, from a market's perspective, it's rare that a stock shows the pressure of an antitrust action. What is your assessment of how strong the DOJ case is against Apple?
I think it's very strong. They listed about 5 behaviors that are not intended to gather up all of the different complaints that people have about Apple, but rather the 5 behaviors that they think most probably violate the law. So those include, go ahead.
No, I'm sorry, John. Please continue your thought.
Yeah, no, so those include using the App Store monopoly to prevent certain categories apps from competing, blocking banks from accessing the NFC chip, and other matters. And those are classic exclusionary behaviors where companies that have dominant market share, market power, monopoly power, whatever you want to call it, they're usually prevented from doing things that block out competitors. I think the DOJ put forward a very compelling narrative showing how Apple, for years, has done just that.
The Apple argument in this is essentially that the consumer does have choice, right? That Apple, are the maker of a creative market. Do you think that a competitive market, right, in that they offer developers the opportunity to make a living, to make apps that are competitive with one another, does that give them any chance of warding off this fight from the DOJ?
I don't think so. If you're a developer, you have no choice but to develop for both iOS and Android. And I really doubt that the majority of iPhone customers buy iPhones because specifically of these exclusive practices. Apple makes excellent products. No one's denying that. I have an iPhone and I love it. The question is not whether Apple makes good products and whether it competes, but whether it can use its product to control other markets like smartwatches or payment apps.
John, you work at Public Knowledge, and I'm summarizing, but the goal of Public Knowledge is to make sure that each part of a technology and its stakeholders have a say in the future, right? One of the things that gets debated in the antitrust context is who is it serving? Who is it protecting? And the argument from the DOJ is that it is protecting the consumer, right? It is making sure that it ends in a policy change at Apple that would allow for the consumer to have greater choice. But does that actually ever happen? Does that actually ever become the end result?
I think it does very frequently with antitrust cases. They do take a long time to litigate, and antitrust is not the only tool that policymakers have to protect consumers. But here, I repeat again, DOJ is not suing Apple for having products that are too good or too integrated. It's suing Apple for blocking competitors from doing the same thing on the Apple platform, which is so dominant that if you're a competitor, if you're an app developer, you simply have no choice but to develop for the iPhone.
You just mentioned there that it's not the only tool. We often talk about regulating through the courts, but there is also, of course, lawmaking on Capitol Hill. Is there an avenue, do you think, for Apple to reach some kind of settlement with the DOJ, where they could just work this out behind closed doors?
I really couldn't predict whether to be a settlement. Apple's going to file an answer to the DOJ's complaint that's going to set forth its side of the story. And like I say, litigation often takes years to develop. In the meantime, though, Congress is not sitting on its hands, and other regulators around the world are not sitting on their hands. Congress introduced a bill it did not pass a while ago called the Access Act, which would have opened up the App Store monopoly just a little bit. And as you just reported, in Europe, Europe is taking action. There's litigation in Australia. So it's going to be a very complicated situation, I think, globally for Apple. And ultimately, maybe it is in their interest to try to settle and try to resolve some of these disputes. But Apple so far has shown that it just wants to fight tooth and nail and resist any attempt to regulate it or change its behavior.
It is getting complicated. And as you point out, Apple is facing antitrust scrutiny on 2 fronts, the DOJ in the US and under the Digital Market Act in Europe. And I just want to say, because it was remiss of me not to, that if you read the Bloomberg story, each of the companies, Apple, Alphabet, and Meta, gave a pretty full response saying we are compliant with the DMA. So I encourage our audience to go and look at those responses. John Bergmayer, Legal Director at Public Knowledge, thank you very much. Now, sticking with Apple for a second, Apple's CEO, Tim Cook, has revealed plans to invest further in supply chain, stores, and research in China. State media says he also made the promise in a meeting with Beijing's Commerce Minister. Cook also spoke at the annual China Development Forum, saying AI will be an essential tool for helping businesses reduce their carbon footprints.
We would not be able to recover the level of material that we do today for recycling without AI. I mean, it's already fundamental in our calculation, and I think it provides an enormous tool in the toolkit for every company that's wishing to be carbon neutral or to lower their emissions by a substantial amount.
Coming up on Bloomberg Technology, we'll have the latest view on Lucid's $1 billion cash injection from its definitively biggest investor. As we head to break, let's take a quick look at the NASDAQ 100. This is my go-to index, very heavy, very concentrated, with higher multiple tech names in the mega caps. We're soft at 0.2%. We started the week with a bit of nothingness and treading water, but remember, we're coming off the best week for the NASDAQ 100 and other indices in 2024 so far, and the focus once again will be the Fed, rates, and I guess eventually earnings season, which we all enjoy. We'll be right back. This is Bloomberg Technology. Okay, so Lucid trading up around 5 to 6% right now. At its session high, it had been up 21% as the company received a $1 billion cash injection from its biggest investor, an affiliate of Saudi Arabia's public investment fund, providing the electric car maker, frankly, with a further lifeline. Here to discuss is Bloomberg's global autos editor, Craig Trudell in London. I mean, you and I have been following Lucid a long time, well before the reverse merger with the SPAC that took them public. But the point of that is that we've also tracked the billions of dollars that the PIF, and its affiliates have put in. Just bring us up to speed on how much cash Saudis have put into Lucid so far.
Yeah, I mean, this is, people talk about the Federal Reserve put, the Fed put. This is the PIF put, if you will. This is another billion that the Saudis are putting into Lucid. This is on top of $5.4 billion that Lucid has said has already been put in by their biggest shareholder. And it really was necessary. I mean, it may be the case that this is not the last capital raise that we see this year, because this is a company that, going into 2024 had only a little bit over $4 billion on its balance sheet. And there were some expectations among analysts that, roughly all of that could be accounted for in cash burn this year. And so, Lucid has been a company that, when it was going public through a reverse merger, was looked at as, a potential Tesla challenger. It's really struggled to live up to those expectations and get, manufacturing going.
Right.
I think it let a lot of investors down with their outlook for this year being really just a small increase from last year's production.
Yeah, that seems to be the story of Lucid, right? I think they're guiding to 9,000 units this year. It's a premium price point. They only did 8,500 last year. But at the same time, there's an EV problem generally. Where does Lucid sit within that?
Yeah, I mean, I think there is some hope that maybe moving into a new segment into sport utility vehicles with the Gravity would be, a big help for them. They, to your point, are playing at the higher end, and the level of competition there is particularly high in the U.S. I think we've seen, so much more, fighting up at the upper ends of the market, where we haven't really seen, as we have in China, cutthroat competition among, cheap EVs. And so,
right.
When you have to go up against more established players like the Mercedes, and BMWs of the world, it's really tough. And Lucid has compelling product. The issue that they've had is not being able to make enough of it and to be able to make their EVs without losing a ton of money. The more they're making, the more they're losing, and that's not a trend that can be sustained.
As Elon Musk has teased them about in the past, prototypes are easy, production is hard. Overnight, Bloomberg News spoke to the CEO of CATL, the world's biggest maker of batteries for EVs. What were the main takeaways from that interview?
I think one of the big ones, of course, was an exclusive that Ed, you were a part of earlier this year. This idea that CATL did have some equipment that was idle in China that Tesla is going to make use of by making more batteries at its factory in Nevada. I think this is a company that is really sort of pressing ahead in spite of the fact that we're seeing an EV slowdown, and sort of vowing to continue to add capacity. And I think we're seeing this sort of broader trend, whether it's CATL on the battery side or BYD, which makes both EVs and batteries. The real dominant players in China are sort of pressing their advantages over the others, and continuing to add capacity, cut price, and the question is going to be how much longer some of the lesser companies in China can sustain themselves in the face of the big getting bigger and getting all the more aggressive to sort of drive out the players who can't keep up.
Bloomberg's Global Cars editor, Craig Trudell, great to have you on the program. Thank you. Now, coming up here on Bloomberg Technology, a shake-up at Stability AI and its C-suite. More on the resignation of CEO Emad Mostaque next. We're also taking a look at shares of Boeing. You must have seen this story. Up 8/10 to 1%, way off session highs. CEO Dave Calhoun will step down at the end of this year. There are pretty sweeping overhauls of leadership. Larry Kellner will not stand for re-election as chairman, and Stan Deal, the guy on the right-hand side of the screen, the guy that led the commercial business and the commercial airplane division, is also departing with immediate effect. That is the big story out of the aerospace industry this Monday. This is Bloomberg Technology. Okay, it's time for Talking Tech, and in the news, Match Group is naming 2 directors to its board. Following talks with activist investors Elliott Management, the owner of dating apps Tinder and Hinge will add Instacart Chief Marketing Officer Laura Jones and Zillow co-founder Spencer Rascoff to its board immediately. Match also said it signed an information sharing agreement with Elliott in an effort to, quote, facilitate ongoing collaboration towards value. The company plans to update shareholders on its strategy at an upcoming Investor Day. Plus, AI chip startup Elian raises $60 million in a Series B funding round led by Samsung and Tiger Global. The company provides tech that unifies semiconductors to work more smoothly and faster. The funding comes as the leader of AI semiconductors, NVIDIA, put forward its path of combining chips to work as one, relying on the work of companies like Elian to help realize their goals. And this is a big one. Stability AI CEO Emad Mostaque has resigned. The move comes amid quarrels with investors and waves of senior staff departures at the British AI startup. In a blog post released Friday, Stability AI said its COO and CTO will serve as interim co-CEOs. The company is best known for its image generation tool, Stable Diffusion, and it helped kick off the AI frenzy, reaching a value of $1 billion in 2022. I want to bring in somebody who is at the heart of the reporting on this story, Bloomberg's Rachel Metz. And I don't say that lightly. You covered every single step in this story, but ultimately, Emad has resigned. What do we know?
Well, we know that he said that he is stepping down to work on solving the concentration of power in AI. We had been thinking for a while that he may be stepping down. We had heard rumors about it. We were aware that some of the people behind the original version of Stable Diffusion, who had been at the company for quite a while, were leaving the company. So perhaps this helped shift his decision. It's a little bit unclear at this point.
What I've learned over the last few months for your reporting, Rachel, is that there's the company that can or cannot be well known, and then there's the tool, right, the generative AI tool. In this case, Stable Diffusion works well, doesn't it? It is a well-known and leading piece of technology.
That's correct. It is well known. It is a leading piece of technology. It was originally developed by a handful of researchers in Germany, and EMAD stepped in and offered to pay for compute to further train this existing model. Previously, it was called latent diffusion. They renamed it stable diffusion, and EMAD decided to spread it far and wide, essentially, through Stability AI, and that helped bring it to the public and popularize it, and really touched off a lot of what we're seeing now in terms of the generative AI boom.
So what's left at Stability AI, or should I say, who is left at Stability AI?
This is a good question, and we're trying to figure out some of this now. I mean, in terms of like top tier researchers, I'm not sure if there are that many people left there. Some of the best people just left. We have like, we're trying to figure out like who on this list of names from some of their biggest research papers is actually still there. We're gonna have to take a look and see what's happening very soon.
You have to remember who put the companies in these positions, right? At least to get their name out there. Who are some of the investors behind Stability AI?
Cotu and Lightspeed, and then there's also a bunch of smaller and individual investors as well that went through like multiple rounds. I mean, it's important to remember also that Stability AI didn't just emerge fully formed in the summer of 2022. It was originally created as a way to use, I think it was AI to help with COVID-related research or rounding up COVID-related research, if memory serves. And then it sort of shifted gears at a certain point, probably in early 2022. All
right, Bloomberg's Rachel Metz, who, as I say, you have been all across the Stability AI story for months, and we appreciate the reporting. Coming up on the show, we're going to get back to crypto and talk Bitcoin with Strike CEO Jack Mallers. I know a lot of you pinged me on social about that. And a quick check on shares of some of the chip names. Now, check out AMD and Intel. AMD now up 1.6%, but Intel has stayed lower. It's paired some of its declines. The Financial Times is reporting that China's finance ministry and its industry and information technology ministry are issuing new guidelines whereby government entities have to source chips for servers, and indeed servers in their entirety, from domestic suppliers and move away from foreign providers. This is the latest in the tit for tat in what has become basically a hostile domain. The US is putting forward technology export curbs to China. Now China is responding with technology import restrictions, limiting what government agencies and state-backed companies can use. But in the context of servers, Intel has 25% of its revenues from China. The impact to its data center business, we'll have to see. Keep an eye on that one. This is Bloomberg Technology.
After years in the making, the United States Department of Justice has filed its antitrust lawsuit against Apple, threatening its underlying business model. The government is taking aim at Apple's policies surrounding super apps, cloud gaming services, messaging, tap to pay, and support on the iPhone for third-party smartwatches. While Apple has clearly had a negative impact on partners like component suppliers and app developers, the first iteration of the DOJ's case doesn't really prove how Apple has harmed consumers. Apple has already addressed several of the DOJ's complaints, pledging to adopt RCS to enable better texting between iPhones and Android devices, and the company has shown that it will add new features for developers in the cloud gaming and super app spaces. The DOJ is right that the Apple Watch is favored over third-party smartwatches, and that Apple blocks third-party apps from using the NFC chip in the iPhone for tap to pay. Apple should absolutely address both concerns. But for now, it seems likely that the entire lawsuit will take a few years to result in major changes. Still, I ultimately expect Apple to crack the iPhone open in the same vein as it is doing in the European Union because of the Digital Markets Act. All of that being said, the DOJ is still distracting from some real issues by focusing on resolved matters, including making frivolous claims that Apple is behind the downfall of the Amazon Fire Phone a decade ago. Still, things can change quickly, especially when new evidence emerges in a trial. Ultimately, the lawsuit seems a bit frivolous, but there's a lot that Apple has changed, and there's a lot that it can still change. I'm Mark Gurman for Bloomberg News.
That was this week's Power On with Bloomberg's Mark Gurman. Let's take a quick look at Apple shares. We're down more than a percentage point in the session. The catalyst there, the probe by the European Commission in Europe in the context of the Digital Markets Act. When we covered the DOJ suit last week, the stock fell 4% Thursday, biggest drop since August. But the entirety of its decline year to date is about 12%. It's a stock that's starting to feel the antitrust pressure. We talked about that on two fronts. Just real quick on the DMA, an Apple spokesperson did tell Bloomberg that Apple feels it is fully compliant with the DMA. This is Bitcoin. And you noticed that jump just before we came on air, back up towards 70,000 US dollars per token. There is a calendar moment coming up. Bitcoin is approaching its highly anticipated halving event, which was lower the supply of newly minted Bitcoin from miners. Bitcoin, of course, hit records after each of the last three halvings. Got a good guest for you. Let's bring in Strike CEO Jack Mallers, who I have discussed this with before. But Jack, just give me your thoughts on the halving.
What's going on, Ed? I miss you, brother. You look good. The Bitcoin halving, yeah, of course, man. The halving's a huge deal. So just to be clear, everyone is aware of the fixed supply of Bitcoin. There will only ever be 21 million, but not all 21 million have been issued to the world yet. And so Bitcoin is on a fixed issuance schedule. Satoshi programmed when he or she or they launched Bitcoin on how those would be issued out. We're at about 19 million out of 21 so far. And every 10 minutes, more and more get issued. And the halving is when that issuance schedule gets cut in half. So the supply, the forced sellers, those that pay money to produce Bitcoins, which then have to sell it to pay for their costs, that's going to be halved. And so the really simple way to think about it, Ed, is if demand remains the same and the Bitcoin sold gets cut in half, it should have an impact on the price to the upside. So it's a big event, and we're all pretty excited about it.
Jack, let's have a healthy and robust debate here, but just give me a moment to outline a counterpoint to you. Because you've been in the camp for a while, right, that there is only ever going to be 21 million Bitcoin. And so prices have to go up. That's kind of the argument you've made, if you'll just give me that. And you've talked about in the context of hyperinflation, don't be holding dollars. But I would point out that the market doesn't see further inflation. It doesn't see more inflation to come. And if you'll allow me, if you look at this morning's trading in terms of liquidity, I think $30 to $40 billion worth of Bitcoin was out there in the market. So there are counterpoints to the thesis that you've outlined.
Is that the end of your point?
End of my point. Please proceed.
Okay. Yeah, I was trying to be polite. I mean, let's dumb it down. The problem with central planning money, which is such a core technology to society working. Think about it, Ed. You go to work every single day and you pour your blood, sweat, and tears, all of the time you spend on this planet in exchange for what? Money. So the central planning of money convolutes and complicates so much of the inner workings of society. Let's go back to basics. Our government is in debt, right? Yes or no? The US government, that is. What all governments, right? Our government's in debt. Okay, traditionally, Ed, if I owed you 20 bucks, I'd have two options. I'd one have to default on that and say, you know what, Ed, I hope you still consider me a good friend, but I'm not going to make whole on that $20. The other is I could pay it back. Those are classically the two options that anyone in debt has, right? Now, the government, because they centrally plan and control our currency, unfortunately has a third, and that's that they can print more money, devalue the debt that they have and that they owe, and allocate more capital to themselves. So our government can't default. The US, the United States of America, cannot default on debt. It would collapse the entire planet. We also cannot afford to pay it back. So if you just, listen, I didn't even go to college, brother. This is just 101 basics, how the world works. If we can't default and we can't pay it back, what's the only option that they have to do? No matter what they sit and tell you at the Fed chair meetings and all of the economists, they have to issue more dollars. And so if there's going to be more pieces of green paper, you want them competing for the most fixed thing, right? There's more
Right.
dollars that are competing for a fixed amount of Bitcoins.
And Jack,
yes, real estate's going to go up too because there's more dollars competing for real estate, but they can make more real estate. They can find more gold. They can't make any more Bitcoins. And that's just, I mean, even a college dropout can understand that, my friend.
Jack, let me jump in and again just reiterate that the basic of the argument is that there are only ever going to be 21 million Bitcoin, and the finality of that, what am I trying to say? The supply constraint on that is what will provide upward momentum. I have many questions for you. I think put your Strike CEO hat on and let's talk about payments. Give me an update on the state of crypto payments. We got a lot of questions about this, about real world adoption, because we kind of over the market mechanics of Bitcoin now, I think, at this point. What are you seeing out there globally?
I think the biggest... I don't know if it's tension. The biggest story is stablecoins for sure. Here's my personal take. Bitcoin is the only neutral value transfer protocol for the world. We view it at Strike as the single value transfer protocol for planet Earth. Now, that sounds like a lot of gobbledygook. What I actually mean by that is Bitcoin is the only physical digital instrument. So a stable coin is just an IOU for a bank deposit. It's like a innovation to ACH, but you have counterparty risk with the issuer, with regulators, with where the bank deposit is held at that bank. What if they're fractional reserved? So Bitcoin's the only physical instrument on the internet that we can move globally. So we view it as the way, like it's like the TCP/IP of value transfer for the web. But the problem, I think, is that consumers around the world prefer stable coins because of their relative stable value to Bitcoin. So when you have emerging markets like in Africa, like Latin America, all through Latin America, they find it difficult to stomach the volatility. If you're living paycheck to paycheck, Bitcoin can be an intimidating asset. So where we are spending a lot of our time is trying to meet the consumer demand of Africa, of Latin America, where Bitcoin, the technology, is just so far ahead of everything else. But the dollar value is valuable to consumers in these regions. So I think that's going to be a lot of the payments innovation over the next few years, is the marrying of those two concepts.
Well, just a quick follow-up on that. So geography was one of the other questions that we got. So, for example, how's the El Salvador HQ going? As one example, but you mentioned, I think, Africa and Latin America. Do you kind of have, we only have a few seconds, Jack, but do you have a specific list of countries to which you've actually expanded service?
Yeah, we just launched Strike Africa. I think, listen, every single person on the planet is dealing with fiat debasement, is dealing with what I explained, is the fact that their government has to issue more of their currency. So access to Bitcoin is paramount. It's a killer use case because it's the only thing that no one on the planet can create more of. And then for payments, we think it's fascinating to disrupt cross-border payments. I mean, the fact that I can move something physical, like a water bottle or my iPhone, from here to Nigeria, but it's a Bitcoin, is crazy, man. The cost should really come down there. So Africa, we've launched. Europe is up next. Latin America after that. We're on a warpath to bring a Bitcoin-focused consumer experience to the world. No altcoins, and we're doing well. I'm curious to see where this goes.
Jack, I actually have a question for you in real time through the IB on the Bloomberg terminal. I'm just going to read it to you. Jack, how can the blockchain sustain itself if the miners who are validating the transaction mine less and less new coins? That's a direct question to you from our audience.
Yeah, so the miners get paid fees. So every single transaction is a fee associated with it. So miners, in theory, collect revenue. There's been blocks as of recent where the fees actually are more than the issuance reward. But the Bitcoin protocol also auto-adjusts itself, and the difficulty required to mine blocks changes by how many people are mining as well. So the protocol is built to sustain itself. And this is also a problem that is way out in the future. I think sometimes when people get stressed out, listen, the Bitcoin price is outpacing the halvings, right? Bitcoin is going up multiples more than the issuance is being halved. Bitcoin's already up over 100% in the last calendar year, right? So I think that this is an anxiety-inducing problem that we may face in 20, 30, 40, 50, 100 years. But the answer is Satoshi's intention was transaction fees, is that people pay for block space, pay to get transaction finality, and that should sustain the network plenty.
Strike CEO Jack Mallers, thank you for fielding my questions. Thank you for fielding audience's questions. We'll get you on in the near future. Now, coming up on the show, Frontline Ventures wants to accelerate transatlantic expansion for B2B software companies in both the US and Europe with a brand new fund. We're going to talk more about that next with Frontline Ventures partner Zoe Chambers. Stick with us. This is Bloomberg Technology. Okay, Frontline Ventures recently raised $200 million across 2 new funds with the goal of accelerating transatlantic expansion for B2B software companies. That's in both the US and Europe. I want to bring in Frontline Ventures partner Zoe Chambers for today's VC Spotlight. So what qualifies then as a transatlantic B2B software company? What would a startup or founder have to offer you to get a check out of those funds?
Well, absolutely. First of all, thanks so much for having me this morning, Ed. As you mentioned, my name's Zoe Chambers, and I'm one of the partners here at Frontline Ventures. So we have 2 complementary strategies. We have a European early stage fund that looks to be the first institutional check into startups that really are globally ambitious and look to want to accelerate their market entry into the States. And then we have a growth stage fund, which invests at Series B to D and looks at helping those companies enter into the European market. And we have done that so far with companies that include Mosaic ML, which is now part of Databricks, Vanta, Lattice, Attentive, and Navan.
I find that really interesting. Does it reflect a deficit of talent or a deficit of companies operationalized in one market versus another? Or is it just the opposite, that if you want to grow a really good software or SaaS company, you kind of need to be in those markets?
That's exactly it. It's that point. So fundamentally, 70% of global software spend comes from the US and Europe. And in fact, 70% of venture capital dollars is also in those 2 markets. So our whole fund strategy centers around the core belief that you have to access and win in both the US and Europe if you truly want to be, a category leader and go on to IPO. So it's more about the most talented want to have a foothold in both of those geographies because they are just so important.
So when Frontline is looking for this talent, the founders, tell me about the firm and how it's set up. Do you have people transatlantic as well in terms of your offices?
We absolutely do. So we have folks in San Francisco, in New York, in Dublin, and in London. And that kind of follows not only kind of where talent is, but equally the key 4 landing spots when you are a US company who expands into Europe tends to be London, Dublin, Amsterdam, and Berlin. And then the other way around, San Francisco and New York, absolutely 2 very strong, mature ecosystems. And so, of course, we have partners on the ground there.
Frontline Ventures partner Zoe Chambers, 2 new funds, $200 million going after the transatlantic startup. Thank you for joining us. Appreciate it. Now, coming up on the show, Instagram makes changes to its suggestions for political content, and that has invoked a response from its user base. We're going to go to DC and get some of the details coming up next. This is Bloomberg Technology. So Instagram users are taking to rival platforms, for example X, to voice some outrage that parent company Meta quietly rolled out a feature that limits political content by default when it comes to suggested posts. I want to bring in Bloomberg's Kaylee Lyons out of DC. This is an interesting one. It is like user protests. Just explain the story to me.
Well, this is interesting, Ed, because actually both Instagram and Threads, the 2 platforms here, had announced that these changes were coming in a blog post back in February, essentially saying they were no longer going to be proactively recommending political content. They said at the time that if you decide to follow accounts that post political content, they don't want to get between you and their posts, but they also don't want to proactively recommend content from accounts that you don't follow. So this isn't about who you follow, it's about who you don't, and that not coming up in your explore page, for for example, or Reels when it relates to political content. So now it's the default setting that you won't see that political material unless you select to. In response, some have said maybe this is a way to reduce misinformation or inflammatory content being circulated in an election year, but others are saying that they could limit political discourse in an election year. There is also a lot of concern about how exactly the companies are defining political content, what exactly that means and how they're categorizing it. In that same blog post Instagram put out last month, they suggested it could be potentially related to things like laws, elections, or social topics. Obviously, that's a pretty broad basket. And so in response, you're getting users on all ends of the political spectrum that seem to be unhappy with this. Right-leaning users have suggested this could be yet another example they see of efforts to censor conservative speech in particular. But even some on the right say they see this as an attempt by the platform to limit pro-Palestinian conflict. So it's just another example of the difficulty between policing content, making sure misinformation doesn't circulate, but also abiding by First Amendment rights, granted with the right to free speech.
It's an interesting case study in an election year because Meta, the parent of Facebook and Instagram and Threads, is kind of being proactive, saying, well, here's a new policy. Right. But the user base doesn't like it. Has the company updated its messaging or said anything more recently that suggests they might make a change?
Not that I have seen, Ed. Now, it becomes a question of whether a change could be enforced in terms of policing this content. We have seen just last week, for example, the Supreme Court hearing arguments in the Murphy versus Missouri case, essentially a lawsuit that was brought against the Biden administration, arguing that Biden agencies like the CDC, for example, went too far in their efforts to pressure platforms, including what was then Twitter, even Meta, to take down information related to the 2020 election, for example, the validity of the results, the efficacy of COVID-19 vaccines. We're still going to await a ruling from the Supreme Court in that case, but it could have actually pretty sweeping ramifications for the way that these social media platforms police their content. So it's a question of whether laws could actually enforce any kind of change on the part of these platforms, not just whether they'd elect to change policy themselves.
All right, Bloomberg's Kaylee Lyons out of DC. Really appreciate the reporting. Let's talk markets again. After last week's public listings, could the US IPO window finally be reopening, properly? Next in line is iBot, a consumer tech company which offers cashback rewards on various purchases through the iBot Performance Network, mobile app and website. Guess who's on the story? Bloomberg's Katie Ruth. I remember you guys reporting last week about the banks involved in this one. Update me on where this name's at.
That's right. So we had, scooped that they had hired bankers late last year, and then last Friday, the filing came out that they, that revealed their financials, indicating that they plan to go public in the coming weeks.
Okay, so iBot. Am I saying that right? iBot?
Yes.
I think that's right.
iBot, as in I bought a thing. That's what the company told me.
Oh, rather than robot, I bought a thing. Okay, well, tell me the basics of the business. Is this one we're hyped about? Is this an exciting tech name?
So it almost hails from the Groupon era. It's from more than a decade ago. It's coupon related, although it is different than Groupon. But you can get cash back at a lot of different retailers, particularly groceries. They have a large partnership with Walmart. Walmart is a strategic investor here, and so they help users make money while shopping, or at least get a portion of the money they're spending back.
Valued at $1 billion, Series D round 2019. Another IPO for us to be excited about. Bloomberg's Katie Ruth. Great reporting. Thank you very much. So that does it for this edition of Bloomberg Technology. It was going to be a slow Monday, and then it became a very busy, news-heavy Monday. Recap the show on the podcast, wherever you're getting your podcasts. We're publishing it to the Bloomberg platforms like the Bloomberg Terminal and websites. But we're also putting the podcast on Apple, Spotify, and iHeart. Why? Because lots of people listen to podcasts on platforms like that. And I know that Joe Rogan's up there, but Bloomberg Technology, it's a pretty good podcast too. This is a shorter week. Remember, it's a markets holiday at least in the US this Friday. Earnings has kind of been and gone, so we're still continuing to follow what's going on in the antitrust context, what's going on with crypto markets, in particular Bitcoin. From San Francisco, because Caro's out, this is Bloomberg Technology. Have a great day.